that is the purpose of this Ipsas. Unlike IFRS, IAS that is used by company, government to has their own standard. The standard used by government is called Ipsas. So Ipsas has been in existence progress. Ipsas in Nigeria, the roadmap for Ipsas started in 2011. The roadmap of Ipsas in Nigeria started in 2011, but the full adoption of Ipsas in Nigeria commenced in January 2000.
Just he's reading what he's saying. No, you just think I don't know. I think you the PDF I was able to read within a short period. I just remember the last thing. So
be prepared in line with Ipsas. So this Ipsas, what this Ipsas means is it's a basis of preparing government financial statements by using accurate basis, by recognition of creditors and debtors, recognition of fixed assets in the statement of financial statements, provision for depreciation. As from 2016, government now recognize debtors and creditors. Government now recognize fixed assets. Government now provide for depreciation in their financial statement. Prior to that period, government does not recognize debtors and creditors. Government is using cash basis of accounting before. It was adoption of Ipsas that made government to migrate to accurate basis of accounting. Government was using cash basis of accounting in the past. So what are the benefits of Ipsas? Let's look at the benefit of this Ipsas. What benefit do we tend to achieve from adoption of Ipsas? Number one benefit, accountability. Ipsas will promote accountability in government transaction. It will ensure that government financial transaction is accountable. You understand? It will ensure that government can account for their transaction. They can give reports, stewardship reports of their transaction. Another one is transparency. Ipsas will ensure that all the information, all the government transaction is transparent enough. Transparency means openness. Transparency has to do with openness, integrity. So Ipsas will ensure transparency of government financial statements. Ipsas will also improve credibility and integrity of government accounts. Ipsas is going to improve credibility and integrity of government accounts. Likewise, too, adoption of Ipsas will build confidence on donor agency. What this one means is that the foreign financial institution, IMF, World Bank, non-governmental organization, they will have more confidence on Nigeria government when Nigeria government is using Ipsas. So some of them will like to do business with Nigeria government because this Ipsas is not only Nigeria government using it. All other countries, they are using Ipsas. Most of all other countries too, they are using Ipsas because we call it international public sector accounting standard. It is not only used in Nigeria. Some other countries too, they are using it. One of the recommendations of IMF and World Bank then is for you to have access to IMF loan and World Bank loan as a government, you must prepare your financial statement in line with Ipsas. So please, let's try to mute our audio. There's a distraction. Please, everybody should mute their audio. Another benefit of Ipsas is better service delivery can be achieved through Ipsas. Better service delivery can be achieved through Ipsas. We will achieve better service delivery through the adoption of Ipsas. Ipsas will also enhance public-private partnership arrangements. Ipsas will enhance public-private partnership arrangements. So Ipsas will enhance that. So we have so many benefits of Ipsas. So, but as a good student of public sector accounting, at least let's know at least 7 benefits. Ipsas will also attract foreign direct investments. It will increase foreign direct investment. It's a benefit. Ipsas will increase foreign direct investment. Ipsas will also enhance implementation of Freedom of Information Act. So we have so many benefits that will be derived through the implementation of Ipsas. Like I said, in Nigeria, the implementation of Ipsas started in 2016. So now, what are the challenges of Ipsas? What are the challenges of Ipsas? What are those challenges that can be derived from using Ipsas, that we can experience from using Ipsas? What are those challenges? Number 1 challenges, institutional challenges. Institutional challenges, this one means every institution have their own tradition, legal, economic sectors. Ipsa may work in UK, but because of Nigeria environment is different from UK, it may not work. The structure of Nigeria government is different from that one of UK. So by virtue of that, Ipsas may be difficult to work in Nigeria. Institutional challenges. Different institutions have their own diversity in terms of political, cultural, traditional, and legal sectors. Another challenges of Ipsas is organizational challenges. Organizational challenges. Some organization, some government sector, they are more complex than other government sector. Example, Nigeria government structure, federal government structure. We have so many ministry, agency, department, parastatals under Nigeria government, federal government. So it may be difficult for Nigeria government to adopt Ipsas in full because of the number of agency ministry under them. Unlike some country that they don't have too much ministry, agency, that one will be easy for them to adopt Ipsas. Another challenges of Ipsas, political challenges. Change in government may affect Ipsas. Changes in government. as the government is changing day by day, a new government may come that will say this Ipsas you are using is of no useful to us. You understand?
No.
We should not use it again. So changes in government, political challenges, changes in government from time to time may affect implementation of Ipsas. Principal challenges. Principal challenges. This one, it affects Ipsas generally. Ipsas does not have principle. Ipsas does not have conceptual framework. Unlike IAS, IFRS, they have their own conceptual framework. But Ipsas does not have conceptual framework. It does not have its own conceptual framework. The conceptual framework that we use for Ipsas was the conceptual framework of IAS, IFRS. So there is no conceptual framework specifically designed for Ipsas. Professional challenges. Professional challenges. Presentation of Ipsas. Presentation of financial statement by using Ipsas may be difficult to adopt. You understand? So it may require the service of a professional accountant. And for you to engage the service of professional accountant, that means you are going to spend more money. Likewise, too, some professional accountants may not have the basic skills and knowledge, technical know-how on how to implement Ipsas. Some of those who are working in government Ministry of Finance, government treasury, they may not have professional expertise on the basic requirements of Ipsas. Though when government want to introduce Ipsas, they organize different training and workshop for their staff on the adoption of Ipsas. So training was organized for them from time to time. So Ipsas is very expensive to implement. Preparation of financial statement through Ipsas too. Sometimes it's time consuming. It's time consuming. And ambiguity on the status, on the stand, ambiguity stance on the basis of accounting is also challenges of Ipsas. So these are what we need to know on introduction to Ipsas. So in Ipsas, we need to know the benefit of Ipsas. We need to know the challenges of Ipsas. You may be asking exam, what are the recommendations for the problems or challenges of all these Ipsas we mentioned? What are the recommendations, solution, possible solution to all these problems that we mentioned? Training and workshop should be organized to government staff is one of the recommendations. There should be a specific framework for Ipsas, conceptual framework for Ipsas. It's another recommendation. There should be a roadmap for adoption of Ipsas. So those are the recommendations to those challenges we mentioned. Now, Ipsas
Sir,
one,
please come again.
my colleague, Mr. Wasil,
Hello,
we
sir.
have discussed Ipsas one already. He have
Hello,
discussed
sir.
Ipsas one already. But I just
Hello,
want to
sir.
summarize this Ipsas one.
Hello,
Ipsas
sir.
one, yes.
Sorry, can you please come again? The recommendation that you just highlighted.
Okay. I said recommendation to the problem of or to the challenges of Ipsas. One of the recommendations is there should be training and workshop for government staff on adoption of Ipsas. There should be training, regular training and workshop. Another recommendation is there should be a specific conceptual framework for adoption of Ipsas. Another recommendation is there should be a clear roadmap on adoption of Ipsas. Now, presentation of financial statements. Ipsas one, Mr. Wasil have already discussed this. So what we need to know in this Ipsas one is we need to know component of government financial statement. And we need to know that there are some government agency. We call them government business enterprise, GBE. This government agency, they are exempted from using Ipsas. They are not expected to use Ipsas while preparing their financial statements. They are exempted from using Ipsas. If this government agency don't use Ipsas, what standard are they going to use? They are going to use IAS and IFRS to prepare their financial statement. We call them GBE, Government Business Enterprise. A government enterprise, a government agency that make profits through selling of goods or rendering of service in a normal course of business is called GBE. Ministry use Ipsas. Some departments of government use Ipsas. However, there are some agencies under Nigeria government, they are not expected to use Ipsas to prepare their financial statement. Example of this agency, NNPC, MPA, NIMASA, FAN. They are government business enterprise. What that one means is that NNPC, MPA, NIMASA, FAN, they derive profit, they generate profit from rendering of service in a normal course of business. So you may be asked, what are the characteristics of GBE, Government Business Enterprise? It's under Ipsas 1. What are the characteristics of government business enterprise? Government business enterprise, they are not expected to use Ipsas to prepare their financial statement. They use IAS and IFRS to prepare their financial statement. One of the characteristics of government business enterprises, that government business enterprise, the entity must have power to contract in its own name. That means that government business enterprise must have the power to do contract in their own name. Another features of government business enterprise is they must have financial and operational authority to carry on a business. They must have what? Financial and operational authority to carry on a business. Likewise, too, they sell goods and services in a normal course of their business. They render service, sell goods in a normal course of business to make profit. It's another features of GBE. Another features of GBE, they do not rely on continuing government funding to be a going concern. That means they don't collect funds from the federal government. The fund that they use to run the operation is the fund that they generate from the selling of that good or rendering of that services. NNPC, you cannot expect NNPC that government will be giving a subvention. No, they will even be the one to be contributing to government costs. They cannot, federal government cannot be giving NNPC a subvention. No, NNPC should be the one to be contributing to federal government central costs. So they do not rely on government funding, continuing government funding, to be a going concern. Another features of GBE, they are controlled by public sector entity. They are controlled by what? Public sector entity. These are the features of GBE. You may be asked, what is GBE? Government business enterprise. Government business enterprise are those government agencies or department that sell goods and services in ordinary course of business. And government business enterprise are not expected to use Ipsas. Rather, they make use of IAS and IFRS in the presentation of their financial statements. And you need to mention their features. Now, component of government financial statements. Under Ipsas 1, component of government financial statement. Statement of financial position, statement of financial performance, statement of changes in net assets / equity, a cash flow statement. Note to the accounts, disclosure of accounting policy, presentation of budget information, which is Ipsas 4. These are components of government financial statement. Why government is using accurate basis of accounting. When government is using cash basis of accounting, their components include cash flow statement, statement of consolidated revenue fund, statement of capital development fund, statement of asset and liability, note to the account, performance reports. Why government is using cash basis of accounting? But right now, government is using accurate basis. So these are the statements, the component of financial statement, statement of financial position, statement of financial performance, statement of changes in net asset and equity, a cash flow statement, presentation of budget information, Ipsas 24, and note to the account, disclosure of accounting. All these are the components of government financial statements. Now, we are done with introduction to Ipsas. We now move to Ipsas 11, construction contract. Ipsas 11, construction contract. Ipsas 11, construction contract. Objective of Ipsas 11. Construction contract. Ipsas 11 regulates the accounting treatment of revenue and costs associated with construction contracts in the financial statement of a public sector entity. How do we recognize revenue and costs associated with construction contracts in the financial statement of a public sector entity? That is what Ipsas 11 is talking about. In this Ipsas 11, we will look at classification of construction contracts. We will look at type of construction contract in public sector. We also look at basis for recognition of revenue under construction contracts. We also look at the prescribed accounting treatment of revenue and costs associated with construction contracts. What is construction contract? Let's start with what is construction contract. Construction contract is a contract that is a contract or similar bidding arrangement specifically negotiated for construction of assets. A contract or similar arrangement specifically negotiated for the construction of an asset is called construction contract. An asset that will take a long period of time to be ready for use is a construction contract. Type of construction contract. Type of construction contract. What are the type of construction contracts we have? Under contract accounts, what are the type of construction contracts? We have cost plus construction contracts. In cost plus construction contracts, for us to determine the contract price, we look at the cost of construction contract, the cost that the contractor incur. The contractor is going to add his profit margin. When he has his own percentage of profit margin, that is what is used to determine the contract price. So in cost plus construction contract, the basis of charging contract price is based on the cost incurred by the contractor plus percentage of the profit margin. Example, assuming you are given a contract to construct a road. As a contractor, you are spending 100 billion on that road. So it is after you finish the contract, you are going to determine your contract price. Though the owner of the contract will be giving you some reimbursement cost that you are spending on that contract. Then when you now finish the contract, if you have spent 100 million, for you to determine your contract price, you will now say, as a contractor, and my contract price is going to be 100 million plus 20% of it. That means 100 million plus 20% of 100 million. 20% of 100 million, that is 20,000. That means your contract price is going to be 120,000. In that case, the profit that you made from that contract is already 20,000. The cost of the contract is 100,000. The contract price is 120. That means your profit is 20,000. That is cost plus construction contracts. Cost plus construction contract is good to the contractor because the contractor cannot make a loss because his contract price is determined at the end of the contract. His contract price is not fixed. Unlike number 2 type of construction contract that talk about fixed price contracts, fixed price contract. In fixed price contract, at the beginning of the contract price is already been determined. You have agreed with the owner of the contract that this is the amount you want to charge. And the owner of the contract is going to pay you based on that contract price. First, he may pay you a mobilization fee for you to start the construction contract. In this fixed price contract, the problem is after you have agreed with the price, assuming the contract is going to take 4 years before it completes, if the price of the material now increase in the future, you cannot go and meet the owner of the contract for variation that he should come and pay you again. That means in fixed price contract, the contractor, if care is not taken, can make a loss. The contractor, if care is not taken, can make a loss. However, there are some fixed price contract that is subject to variation. However, there are some fixed price contract that is what? Subject to variation. There are some fixed price contracts subject to variation. In that case, you can, in the future, when there is inflation, that means you can revise that contract price. You can revise that contract price in the future. Now, number 3 type of construction contract is percentage of completion. Percentage of completion. Percentage of completion. This one, your contract price depends on your percentage of completion. In this one, you need, we are going to mention your percentage of completion. That means what is the level of progress you have made on that contract, on that construction contract. So to what percentage is the job completed? So percentage of completion, for us to determine the profit that we are going to recognize in the financial statement, the profit that we are going to recognize in the financial statement will be based on the percentage of completion. And how do we measure the percentage of completion? There are 2 ways for measuring the percentage of completion. There are 2 ways for measuring the percentage of completion. We can use cost method to measure the percentage of completion, and we can use valuation method to measure the percentage of completion. If you want to use cost method to mention the percentage of completion, the formula is going to be cost incurred over total cost. If you want to use cost method to measure the percentage of completion, the formula is going to be cost incurred to date over total cost of the contract. That means you want to measure percentage of completion in year 1. You ask yourself, what is the cost incurred to date in year 1? All over, what is the total cost you are planning to incur for the number of years that that contract is going to be constructed, for the number of years that that contract is going to be completed? That means you are going to add the total cost of year 1, year 2, year 3, year 4, year 5, assuming the contract want to take 5 years to be completed. So for you to measure percentage of completion, cost incurred to date all over what? Total cost. Cost incurred to date all over total cost. That is how we measured percentage of completion using cost method. If you want to use valuation method, in valuation method, you need to know the value of work certified all over total contract price. In valuation method, we get value of work certified all over total contract price. Value of work certified all over total contract price. That is what we use in valuation method. Value of work certified all over total contract price. So those are the two ways for measuring percentage of work completion method. Those are the two ways for measuring percentage of work completion method. Now, let's try to know the contract cost. How do we know the contract cost? First, let's know the contract revenue. The contract revenue means the contract price. That's contract price that you agree, either fixed or variable or cost plus or variation. That is our contract revenue. But contract costs, what are those costs that will be incurred by the contractor that will be regarded as a contract cost? Number one is cost that relates directly to specific contracts. Costs that relates directly to specific contracts. That means the cost of raw material that is used for that construction contract costs attributable to the contract activities in general. Costs attributable to the contract activities in general. Example of costs attributable to the contract activities in general: insurance costs. You may insure the contract while doing the construction contract. You may insure the contract in case of any emergency. Cost of design. 2. Costs that you use to design that contract. Construction overhead, like transport and traveling, is also part of construction contracts. Now, what costs that cannot be regarded as construction contract costs? What costs that cannot be regarded as a construction contract cost? What costs we cannot regard it as a construction contract cost? Number 1 cost, general administration cost that is not specified in the contract. General administration cost that is not specified in the contract. Another one, selling costs. Research and development costs that is not specified in the contract. Depreciation of idle plants and equipment that is not used in the contract. All those costs cannot be regarded as a construction contract cost. All those costs cannot be regarded as a construction contract cost. Some other costs that can be regarded as a construction contract cost: site labor cost is a construction contract cost. Cost of raw material used in the construction. Depreciation of plant used in the contracts. Cost of hiring of plant and equipment. All these can be regarded as a construction contract cost. Claim for third parties too is a construction contract cost. Now, before we go to the workings, how do we recognize revenue in a construction contract? How do we recognize revenue in a construction contract? Apart that, apart from that, sorry. Apart from that, construction contracts can be looked we can classify construction contracts in two ways: short-time construction contracts, long-time construction contracts. There are some construction contracts that will be completed within a year. Those construction contracts is a short-time construction contract. Why the construction contract that will take more than a year to be completed, that will be completed more than 1 year, is a long-term construction contract. When we want to recognize profit for short-term construction contract, what we need to do is to say contract price, that contract revenue, less all the contract costs, we get our contract profit or surplus. Because it's a short time, it's completed within a year. So for us to get the profit or surplus for that contract, our contract price less contract costs that we incur within that year, because it's a short-time construction contract. But in the case of long-time construction contract, a contract that will take more than a year to be completed, in such case, how we recognize profit depends on stages of completion. How we recognize profit depends on what? Stages of completion. Please try to mute
Please mute yourselves now.
Please try to mute the audio. God. How we recognize profit for long-term contract depends on stages of completion. When a contract when the stage of contract is less than 50% for long-time contract, contract is not yet mature and we cannot recognize profits. So in a long-time contract, your profit recognition depends on stages of completion. Assuming the contract wants to take 5 years, example, the contract wants to take 5 years. If year 1, the stages of completion is 15% or less, that means in year 1, you will not recognize profits. In year 2, the stages of completion is 25%. That means you are going to recognize profit based on 25% completion. In year 3, the stages of completion is 45%. That means you are going to recognize profit based on 45% completion. Year 4,
Hello,
until
sir.
the contract enter 100%.
Hello, sir. Sorry to
Yes.
bring you back. Please, at what stage can't we recognize profit? Is it 50 or 15%?
15%.
Okay, sir. Thank you.
15. I was
When the
thinking it's 15.
stages of completion is more than 15%.
So what if it is 15% at the dot?
Is it more than 15% at the dots?
Yes.
That is, it's not more than 15%.
Excuse me, sir. Sorry to I'll please need a further clarification of this. Is it when the contract is not up to 15%, then profits cannot be recognized? See the point?
When the contract is 15% or less, profit
Okay.
cannot be recognized.
Okay.
Go ahead, sir.
Okay. Now let's look at disclosure requirement of Ipsas 11. Let's look at disclosure requirement of Ipsas 11. What is the disclosure requirement before we solve question? What are the disclosure requirement of Ipsas 11? Number one disclosure requirement: the amount of contract revenue recognized must be disclosed. The amount of contract revenue recognized must be disclosed. Number two disclosure requirement: the method used to determine the contract revenue. The method you are using using cost method? Are you using valuation method? The method used to determine the contract revenue recognized in the period must be disclosed. Is it the fixed price? Is it the cost plus method? That method must be disclosed. Another disclosure requirement: the method used to determine the stages of completion of the contract in progress must be disclosed. The method used to determine the stages of completion of contract in progress must be disclosed. The aggregate amount of costs incurred and recognized surplus up to date must be disclosed. The amount of advances received must be disclosed. The amount of retention must be disclosed. The gross amount due from customer from the contract work as an asset must be disclosed. The gross amount due to customer from contract work as a liability must be disclosed.
Sir, please explain this amount of retentions, please. Thank you.
Retention fee, the amount of retention after you complete the contract as a contractor, they will not pay you all the contract price. Certain amount must be retained after completion. It is after some year, if the contract does not have any defect, that they will pay you the retention fee. In construction contract, we have mobilization fee. Mobilization fee means out of the contract price, the amount given to you at the beginning of the contract to start the contract work is the mobilization fee. We also have retention fee. After you complete the contract, they will not pay you your balance until some number of years. Why? They want to know whether this contract you have done does not have any defects. If that contract have any defect, you will not be given the retention fee as a contractor.
Okay, sir.
Yeah.
Thank you, sir.
Explain the last one, the last point.
The amount of what? The gross amount due to customer from what? Contract work as a liability. Sometimes the contractor will be the one owing the owner of the contract. At the end of the contract, if they do the variation, the contractor will have to refund some amount to the owner of the contract. The owner of the contract is the customer. So let's look at examinable question. Let's look at examinable question. Let's start with examinable question 2. Question 2. Somebody should read the question 2 for us. Question 2.
Government approved the project Ola Street Improvement Program expected to cost 500 million naira.
The voice is not loud. Why?
I don't know. Can you hear me very well now, please?
Okay.
All right, sir. Oliver local government approved the project Ola Street Improvement Program expected to cost 500 million naira. Ministry of Rural Development provides a soft loan of 300 million naira for this project. The remaining fund requires the participation of corporate institutions residents in the street, which they paid willingly. A purchase order was issued for materials worth 320 million naira, and engineering cost was 15 million naira, and compensation of 30 million naira to the landowners. The Commissioner for Rural Development announced the state donation of 250 million naira for this project. Transport and freight cost 50,000. Interest on soft loan is at 4% per year. Equipment rental costs 20 million naira. Wages of workers paid amounted to 90 million naira. The project is expected to be completed within the year. The soft loan is repayable at the end of the project. Required: complete a contract account in compliance with Ipsas 11 and briefly state 2 of the disclosure requirements in Ipsas 11.
So this is a question. This type of a contract, is it a short-time contract or a long-time contract? Is it a short-term contract or a long-time contract?
Short
Short
term.
term.
Within the year, short-term contract.
It's a short-time contract. That means we
Yes.
are going to recognize the whole surplus within a year. So in this kind of contract, when you want to prepare the contract account, what you need to do, all the revenue coming into the contract, you put it in the credit. While all the expenses, you put it in the debit. First and foremost, the project, they expected that the contract is going to cost 500,000 naira. Out of the 500,000 naira, they give them a soft loan.
500 million.
That soft loan is a revenue into the contract. That soft loan is a revenue into the contract. It's the first revenue that coming into the contract. You can see I put it in the credit. They now said the remaining fund will require participation of corporate institution residents in the street, which they pay willingly. How much is the remaining fund that is needed for the contract?
200.
200. Who is going to give them the 200?
The corporation institution residents in the street.
Corporate institution
Institution, yes.
resident, 200,000. Can you see that? At the credit. Now, a purchase order for raw material worth 320 million. A purchase order was issued for
Sir, I did not
material.
get this part. Sorry, sir, please. Sorry for taking you back, sir.
Okay.
This one I didn't get it clearly. Can you please recap, please? This
Which one you didn't get?
300 this corporate stations. How do we arrive at that 200 million naira?
How do we arrive?
Like, how do we get this 200 million naira you explained, these corporate institutions?
Okay. About the 200,000 naira corporate institution is. They said the project is expected to cost how much? The project is expected to cost how much?
500 million.
500 million. Out of the 500 million, a soft loan was given to them, 300 million. When you minus 300 million from 500, what do you get?
Okay. 200.
200 million remaining funds.
So a purchase order was issued for material. Purchase order is a cost. They buy material worth 320 million. You put that in the debit. Purchase order for material purchase, 320 million. You put that in the debit. Can you see that? After that, engineering cost was how much?
15 million.
You also put that in debit. Engineering cost, 15 million. Compensation, they also paid a compensation to the landowner. How much is that?
30 million.
30 million. And they also incurred transport. Transport. How much is that?
50,000.
50,000. Aside that, interest on soft loan is at 4% per year. That means that soft loan given to them, they will pay interest on it. 4% of 300,000 will give you what?
That's 12 million.
That is 12 million.
Hello. Are you there?
Let's wait for him. Maybe it's network.
Hello.
Hello, sir.
Hello, can you hear me?
Yes, sir, we can hear you now.
Okay. Now, interest, 12 million naira. Apart from that, Apart from that, equipment rental cost was how much? 20 million.
20 million.
And wages for workers was how much?
90 million.
90 million.
You state all those costs. Now, there is a statement that said, why the construction contract is going on, though they budgeted 500 million, the Commissioner for Rural Development announced a state donation of how much?
250 million.
50 million.
That means the state government was impressed about the project. This project is good, I will donate 250 million to you. That 250 million, is it a revenue or cost?
A revenue.
A revenue.
Credit.
State donation.
Yes, 250 million. You can see at the end of the day, our total revenue is now going to, please try to mute your audio. Our total revenue is going to be 750 million.
Please unmute your mic.
Audio now.
Our total revenue is 750 million. When you less all the costs from the revenue, you have a balance of, which is the surplus on the contract, 262,950. The surplus on the contract is 262,950. That is the surplus on the contract, 262,950. That means after you finish the contract, after you complete the contract, the amount that is the balance that is in your bank account based on that contract is how much?
262,950.
What you are going to use the balance for? What are you going to use the balance to do?
Repay your loan.
Because they said the soft loan is going to be repayable at the end of what?
Of the project.
At the end of the project.
So that balance of that 262, you use it to repay your what? Your part of the soft loan. That means the loan outstanding will be how much?
37,050,000.
That is how we get that loan outstanding.
So that's 300 million minus. Wait, I think
yes.
300 million minus
262,950. Do we understand?
Yes, sir.
Yes, sir.
So this is a short-time contract.
Yeah.
Now let's look at examinable question 1. Examinable question 1. Somebody should read that for us.
On 1st January 2006, the Central National Service entered into a 2-year fixed price contract for 12 million, I don't know the currency there, to construct a secondary school for Kofansa District Council. The total cost of construction was estimated at 8 million. The accumulated costs incurred from the commencement of the contract to the end of the first 2 years of construction were as follows: 2 million as at 31st December 2006, 6 million naira as at 31st December 2007. The Central National Service accounts for revenue is using the percentage of completion method. You are required to, sir, please, can you go up?
Okay.
All right, thank you. You are required to explain the difference between a fixed price contract and a cost plus contract according to Ipsas 11. Calculate the surpluses through deficits that should be shown in the statement of financial performance in the account of Central National Service in both 2006 and 2007. Explain the disclosures to be made by Central National Service as required by Ipsas 11, I think. All right.
Yeah.
Thank you.
First, differentiate between fixed contract price and cost plus contract. Fixed contract price are contracts where revenue is fixed at the onset of the contract, either for the contract as a whole or for a unit of output. While cost plus are contracts where cost will be recoverable plus some agreed element of profit. The distinction between the two types is particularly important when deciding the stages at which revenue should be recognized. Now,
Sir, can you repeat that, please? I didn't get that.
the distinction between the two particularly
Yes, sir.
important
Yes.
when deciding the stages at which contract revenue and expenses should be recognized. In fixed price, contract revenue is recognized at the beginning of the contract. But in cost plus, contract revenue is recognized at the end of the contract. Because it is after you finish the construction of the contract we determine the contract price in cost plus. But in fixed price, we determine the contract price at the beginning of the contract. Now, B part of the question said we should calculate surplus deficit that will be shown in the statement of financial statement, financial performance, in the account of the Central National Service in both 2006 and 2007. How do we get that? First and foremost, in this question, we need to get, for each of the year, we need to get stages of completion. For each of the year, we need to get what? Stages of completion.
Stages of completion.
Stages of
What are the methods can we use to get stages of completion? Like I mentioned, what method can we use to get stages of completion?
Cost method and valuation method.
Cost method and valuation method. If we want to use cost method, how do we get the stages of completion?
Cost incurred to date
Cost
divided
incurred
by
to
total
date
cost of the
over
contract.
total cost of the contract.
So in this case, in this question, which method are we supposed to use based on the information given to us?
Cost method.
Cost method.
Yes.
In 2006, what is cost incurred to date in 2006?
2006 is
2 million.
2 million.
2 million.
2 million.
What is the total cost of the contract?
12 million.
12 million.
No, that is
12
revenue.
million.
Sorry, 12 million.
12
8
million.
million.
8 million.
8 million.
12 million is the contract price.
Yes,
8
yes.
million is the cost. Do you understand?
Yes, sir.
Yeah.
Contract cost is different from contract price. Price is revenue. Cost is expenses. Cost incurred to date over total cost. For this contract, what is for the number of years, the contract is going to take 2 years. For those 2 years, what is the total cost are we going to incur?
8 million.
The total
8 million.
cost is 8 million.
8 million. Out of 8 million, how much we incur to date in 2006?
2 million.
2 million.
2 million.
And
So
6
for us to
million
get the
divided
stages of completion, 2 million divided by what?
by 8 million.
8 million.
Divided by 8 million.
8 million. That means in 2006, stages of completion is how many percent?
25. That is 25%.
In 2007,
We have 6 million divided by 8 million.
that is what?
That is 75%.
75 million.
Sorry.
75%.
75%, sorry. Do you understand?
Yes, sir.
I have a question, sir.
Okay, what is your question?
How did we know that is a cost that we're using a cost method instead of valuation method?
Depending what is being given in the
When we want
question.
to use valuation method, what is the formula for valuation method?
You know.
Your work certified.
Value of work certified over total contract price.
Over contract price.
Contract price.
Yes,
Yes.
sir.
Are we giving value of work certified here?
Not
No.
at all.
No.
So you use the other method.
You
Cost
use
method.
cost method.
Okay.
Not the other method, the cost method.
So now, stages of completion. 2006, which is the first year. What is the revenue for the contract? What is the contract revenue?
12 million.
12 million.
12
12
million.
million.
25% for us to get revenue in the first year. 25% of 12 million will be what?
3 million.
That is the revenue for first year, which is 2016 or 2006. I used 2016. It's a mistake. 2006 is what I'm supposed to use based on the question. Stages of completion times the total contract price times 12 million. You get the contract revenue for the first year. Cost. How do we get the contract cost for the first year? Stages of completion percentage times what?
The total cost.
Total cost.
8 million. You get what?
You get 2 million.
2 million.
You recognize it.
So difference between 3 million and 2 million will be what?
You have a surplus of 1 million.
Surplus of 1 million. Do we have any proud period before 2006?
No.
No,
No.
it wasn't mentioned.
Dash. This one is nil. Nil. For you to get recognized in the current year, nil. Proud period minus to date. Proud period minus to date. When you minus this nil from 3 million, how much are you still going to get?
3 million.
3 million, Abi?
1 million.
3 million now. Which one is 1 million?
For
3
revenue
million.
to date, look at the heading. We have to date, Abby.
Yes,
We have
sir.
recognized in the prior year. We have recognized in the current year. To date is 3 million for
Àwọn ọkọ máa
revenue.
bẹ̀rẹ̀ sí sàn. Mo ní ìyá kan tó ń gba pension. Ìyá ní àìrí o, àìrí
Please
o.
try to mute your audio. Recognized in the prior period is new. When you minus it from 3 million, you are still going to get 3 million. Abby?
Yes, sir.
In terms of the cost, when you minus, you are still going to get what?
2 million.
That means your surplus under the current period will still remain what?
1 million.
1 million.
Sorry,
1
Mr.
million.
Idris. This column for recognized in prior year, is it something that can be calculated or they will give us in the question?
Do we have any prior year in 2000 before 2006?
No, we don't.
No.
We don't have. We leave it. It's dash. When we get to 2007, you will understand.
Oh, okay.
Let's go to 2007. In 2007, what is the percentage of completion?
75%.
75%.
For the revenue, 75% of 12 million.
9 million.
9
9
million.
million.
75% of the cost.
2 million.
75% of the cost.
6
Sorry, 6 million. 6
6
million.
million.
The difference between 9 and 6 surplus under to date is going to be what?
3 million.
3 million. Prior period.
The one in
period.
2006.
That is in 2006. Prior period in 2006. We have revenue in 2006. How much?
3 million.
3 million.
3 million.
The prior period in 2007. Do you understand?
Yeah.
Yes.
Cost 2. Prior period. You put that 2 million that you recognize in 2006. Do you
The
understand?
difference. Yes,
Yeah.
sir.
Yes, sir.
The difference between the two. Nine minus 3. That is what?
6 million.
6 million. 6 minus 2. That is what?
4 million.
That means your surplus for the current year is
That's 2 million.
2 million.
going to be what?
2
2
million.
million.
2 million.
2 million.
Do you understand?
Yes, sir.
Yes, sir.
Sir, I have a question, sir.
Okay.
For the purpose of exam, are we expected to use, is the question is going to determine the format or the kind of solution we are going to be given, or do we have a particular format for this, as far as this topic is concerned? I don't know if you understand my question, sir.
I can't hear you very well.
Okay, can you hear me now?
I can hear you now.
Yes, sir. I said for the sake of exam, are we expected to use this format, or the question will determine the kind of format we are going to use?
The question will determine the format.
Well, this is the only format he has shown us.
The
I
question
don't
will
know if you
determine the
understand.
format to be
Wait,
used.
For the purpose of exam, you are
yes, sir.
expected to.
I bet this should be the only format. We don't even want further format.
Do you understand?
I
Let
think the
Question
question
will
Mr.
will
be the
Let
determine the
question.
the
treatment.
oh my God.
The question
Let
will
him answer
determine the
my
format.
question now.
So I just want to question.
Mr. Idris.
I think the silence is already an answer. That this is, if it shows us another format, then probably we can choose between them. But this is the only format he has shown us. I believe that this should be the format we will use.
Okay.
Except there's another format is going to show us.
Another question that will come up with another format. So we are not even sure. We are not done.
Abina. All right.
But we don't even pray for further because it could be complicated. So this is okay.
Says who?
Okay now.
We've not tested question on the valuing of an asset now. Value of work satisfy.
Where's Mr. Idris? Oh,
Hello, sir. Oh,
As Mr. Indri is gone for break.
it will go for break now.
Tea break.
Online class is the best.
are you sure?
Who agree with me?
Mr. Idris Otilo.
Mr. Idris.
Let me try to call him to see what's going on.
Okay, thank you.
Hello, can you hear me?
Okay, now we can hear you. We couldn't hear you
Oh,
since.
okay, I'm sorry.
Someone asked a question. All right, sir.
Okay. Somebody want to ask a question. What is your question?
I asked already. Oh.
Okay. Any other question?
Yes, sir. I have a question.
What is your question?
So, sir, does it mean that this 12 this 6 million from 2017, this cost is an accumulated cost that contains the cost that was incurred in 2016?
Is what?
So I am asking that, does it mean that this 6 million that we have as an expense for 2017 from the table is an accumulated cost that contains the 2 million that was already expensed in 2016?
Yes, it's an accumulated cost. It's an accumulated cost.
Baby.
Any other question? Let's look at question 3. That one is more interested than question 1. Question 3, somebody should read it for us.
In a bid to reduce unemployment and create jobs for the citizenry of the Federal Republic of Wazobia, an indigenous cement company, Dango PLC, established a cement company in Ishebe, Yewa State of Wazobia. The company's operation, aside from providing employment for the people of the area, brought along with it some degree of environmental challenges, resulting in health hazards to the inhabitants of the area. The only bridge that linked Izebe with other towns and villages in the area was damaged by the heavy vehicular traffic caused by the activities at the cement plant. In order to mitigate the hazard caused that caused the community by this damaged bridge, the Ministry of Works and Housing was contracted to construct a long-lasting bridge to replace the damaged one. The Ministry of Works and Housing is predominantly funded by appropriation and is empowered to undertake limited construction work on a commercial basis for private entities. With the authority of the Honorable Minister for Works and... Sir, please, can you scroll up?
Okay.
Honorable Minister for Works and Housing, the ministry entered into a fixed price commercial construction contract for 50 million to construct the bridge in 2016. There was no tender publication for the job, and the ministry was the only bidder for the construction work. The initial amount of revenue agreed in the contract was 50 billion naira. The contractors, the Ministry of Works and Housing's initial estimate of contract cost was 40 billion naira. It would take 3 years to construct the bridge. By the end of 2016, the ministry's estimate of contract cost has increased to 41 billion naira. In 2017, the client, Dango PLC, approved a variation resulting in an increase in contract revenue of 2 billion naira and estimated additional contract cost of 1.5 billion naira. At the end of the second year, costs incurred include 1 billion naira for standard materials stored at the site to be used in the third month to complete the project. The ministry determines the stage of completion of the contract by calculating the proportion that contract costs incurred for work performed to date to the latest estimated total contract costs. A summary of the financial data during the construction period is as follows. We can see that table there. Thank you.
Okay, thank you very much. You are required. Let's go to the required.
You are required to calculate the amount of revenue, expenses, and surplus to be recognized in the statement of financial performance in the 3 years in accordance with Ipsas 11 on construction contract. Let's see.
This is a practical questions that shows that they want to construct a bridge, and the bridge will take 3 years to complete. It's a long time contract. And for the bridge, for the duration of the contract, they agree that the contract is going to cost 50 billion naira, though it's subject to variation. So, but all the explanation that they are giving us in these case studies, they now give us a summary that summarizes all what they have been discussing in this question. This summary has really helped us a lot. Look at the summary for 2016, which is the first year. The initial amount of the revenue, contract revenue, is what? 50 billion.
50 billion.
As they state it in the written. In 2017, the contract revenue still remain 50 billion. They added a variation of how much?
2 billion.
2 billion, making the total contract revenue to be how much?
52 billion.
In 2018, they still recognize the contract revenue to still be at 52 billion
52
because
billion.
it has increased in 2017. Abi?
Yes, sir.
Yes, sir.
Assuming there is another variation in 2018, the contract revenue will have been more than 52 billion in 2018.
In 2019, is given.
Now, this table have really helped us to scatter this question. There is nothing in this question again because of this table. Assuming there is no this table, the illustration will just be taking them one by one. Now, cost incurred to date, year by year. In 2016, what is our cost incurred to date?
10 million.
10 billion.
10 billion.
10 million 250,000.
2017,
31 million
105 million.
why 2018 is what?
42 billion. 500
Is it
million.
billion or million?
It's billion because the million is adding
Billion.
6
Okay,
zeros.
now
billion.
write million. That means this one is billion already. That
Yeah.
means the zero at up is in 6th place. Do you
Yes.
understand?
Yes,
Yes,
sir.
sir.
Yes, sir.
Contract cost to complete. Cost to complete the contract in 2016. 30 billion 750. Total estimated contract cost is what? 41 billion.
41 billion.
We are giving that. Estimated surplus, we are giving that. Percentage stages of completion, we are giving that too. Abi,
Yes, sir.
this table has really helped us to do our job. Assuming we are not giving the stages of completion, how do we get our stages of completion?
Total work certified divided by total number of.
There is no value of work certified here.
If cost
No,
incurred to date
Cost incurred
over
to date.
total cost of the contract.
Oh yeah, in year 2016, what is cost incurred to date?
That is
10 to 50.
10 billion 250 million.
Divided by what?
The total cost of the
Total,
41
30
total
billion.
cost,
It's going to
41
be
billion.
divided by
cost to
what?
complete.
Is it not
41
Total
billion.
estimated contract
40,
cost,
41 billion.
Is it not 41 billion?
41 billion.
It's 41
What do we get?
We get 25%.
5%.
25%. Abi, you
Yes.
can see that the examiner wants students to be lazy.
Eh?
No.
Mr. Idris, you don't like those kind of
That
questions.
is quite relative.
Abi, my friend, the examiner wants the student to be lazy. Instead of students to get the stages of completion by themselves. In year 2, what is your stages of completion in year 2? Cost incurred to date is what?
81 billion.
31 billion 125 million.
Divided by what?
41,500.
41,500.
Billion.
What do you get?
75%.
Very easy. But examiner have already given us already what we're supposed to calculate on our own.
Let's go ahead, sir.
Examiner now make it to be looking at a primary, like a primary one question.
Okay.
I pray this kind of question comes out.
So calculate the amount of revenue, expenses, surplus to be recognized in the statement of financial statement in the 3 years, in accordance with Ipsas 11 on construction contract. Year 2016 is the first year, Abi?
Yes, sir.
Stages of, like we did in the last question we saw. You will draw a table, due date, stages of completion, to date, prior year, and recognizing what? Current year. Do you understand?
Hello, sir.
Yes, sir.
Hello, sir.
Yeah.
Yeah, okay. Someone's when
Okay. What do you say?
The format that we'll use, like, is it the same format that we'll be using, or the format we're using, like, to determine the kind of question that they will give us? Like, are we going to use
Assuming
the same format?
stages of completion question, this is the format.
Okay, sir.
This is the format. The last question I saw, you know, I follow this format.
Yes, sir. Yes, sir.
So, detail, stages of completion, to date, recognized in prior year, recognized in current year. What is my stages of completion in year 2016?
25%.
25%, Abi?
Yes.
Revenue. What is my revenue in 2016?
50 billion.
50 billion. 25% of 50 billion.
12,
That is
12 billion 500.
12 billion 500, Abi?
Yes, sir.
What is the total cost in year one?
Total cost in year one is 41 billion.
41 billion, Abi?
Yes, sir.
25% of 41 billion.
10 billion
10
250
billion,
million.
250 million.
The difference between the two
is 2 billion 250
Billion,
million.
250 million.
That is our surplus, Abi?
Mm-hmm.
Do we have any prior year before 2016?
Not at
No.
all, sir.
No.
So that means recognizing current year will still be the same.
Yeah.
Do you understand?
Yeah.
Yes, sir.
Sir, sorry, there's something I'm curious about.
Okay.
Can I go ahead? Okay, so
Go ahead.
let's say the cost incurred, for example, because the cost is supposed to determine our stages of completion, right?
Yes.
So let's say the cost was just high as a result of, let's say, inflation, or, let's say mismanagement. By the time they divide it with the total cost of contracts, the percentage we get will still be high, but that doesn't really determine the stage of completion. I don't know if you understand, sir.
I don't understand your question.
Okay, let's say the cost incurred was just high as a result of, let's say, there's some mismanagement of fund, or let's say, the material price got higher due to inflation. So by the time they now
So far as that cost incurred, is it relevant cost of construction? Is it part of the cost recognized under construction contract? If you go to my written, there are some costs recognized under construction contracts, which I mentioned in this class.
Yes, sir.
I mentioned them.
Yes, sir.
contract costs. I mentioned
Insurance cost, all those
yes,
contract
insurance
cost,
cost, contract related
yeah,
to the contract
cost of
to
design,
the directly contract cost that relates directly to the specific
directly to
contract.
the
Abi?
specific contract.
Cost of labor, cost
Yes.
of design, Abi?
Construction overhead, yes, sir.
Overhead, cost of
Then the one
material.
that does not
The one that does not include contract costs is what?
relate.
General administrative expenses, Abi?
Yes.
Administrative cost,
That was not
selling cost,
specified.
research cost, they will specify.
Okay.
So there's nothing concern us in this question with mismanagement or not. Does it part of contract costs or not?
So does it mean that all these research and development costs, we will not recognize them? Like,
yes, if we are giving, we will minus them from the contract cost, assuming they have added them to the contract cost.
Mr. Idris.
Yes. I can
So
hear you.
We will not recognize all those costs.
Yes, general admin, research and development, selling costs. They are not part of contract cost.
Okay. So
Do
if
you
they give us
understand?
in question, we just leave them.
We just leave them. Assuming they have been added already to the contract cost, we will minus them. I'm saying assuming they have already been added to the contract cost, we will do what?
Minus them.
We will minus them because they are not a contract cost.
Sir.
Yes.
So I think what the lady was asking is that.
So how are we going to know that they've added them?
The question will tell us.
Hello, sir.
I can hear you.
I think what the lady was asking is that I think in reality, if you want to engage in a construction of a road, and in this particular question, we are being told that the percentage of completion of that road that we want to construct, I think that is percentage that are being given in this question. But the lady is now asking that what we use to determine the percentage of completion here is the amount that we have incurred. And in reality, we have not even done the contract.
Yes. In this case, we assume they have done the contract in year 2016.
Because the lady actually make an emphasis that maybe the relevant cost we have to incur, and there is an inflation that actually occur when we are embarking on that particular project. And in reality, we have not actually completed the project. When we look at the fiscal feasibility of that particular project, when you look at the physical substance of it, I think that is what the lady is actually talking about.
I understand your question.
I think I understand.
I understand your question. If there is inflation, if you can make provision for inflation, we can make what? Provision
for inflation.
Okay, so that would like reduce, when we make the provision for inflation, sir, that will now use the stage of completion. That will now bring it down to the reality, right?
Yes. Look at this question now. Look at in year one. If you look at year one, at the end of the year one, they are planning that the total estimated contract cost is 41 billion. But in year two, the total estimated contract cost moved to what?
41.5.
41,500.
41 billion, 500 million.
Why? Because of what?
Inflation.
Variation.
Inflation.
Adjusted for inflation. It has been adjusted for inflation.
Okay.
Hello. Yeah, good morning. This
Okay.
is Ayo.
Another
Yeah,
now.
question this morning.
Any other question?
So I forgot
Not
my
at
charger
present.
on your
Any
You
extension.
forget it now.
I don't
Any
know if
other
you can.
question?
Yeah.
I was
no,
asking that
Maybe you can just help me
who
to
is that
I'll
now?
get on
Please,
Saturday. I'll come and meet next Saturday.
try to mute your
Unmute.
audio. Try to mute your
Who
audio.
is this
Don't,
person
Yes.
now? I want to write ICANN exam.
All right. Thank you.
Wow.
please don't distract
Please,
our
my
class.
question.
Or should in
Okay.
case if Dolako should come, the sales
I was
executive.
asking that if those
Okay, no problem. So I'll
those
just
costs
come
that
on
we cannot
Saturday.
recognize. Oh my God.
All right.
Those
Thank you.
Please
selling
mute your
and
mic
distribution.
now. So yeah.
Who is that person distracting the class then?
Okay,
I was asking
I'm
that.
hearing your
Mr.
question.
Idris,
Oh,
can you
yeah,
hear me,
go
sir?
ahead.
Okay. I was asking that those costs, research and development, selling and distribution costs, we cannot recognize them if we have them in question, like we disregard them. So how are we going to know? And you now said that if they already added them to the cost, like we are going to subtract them again. Are they going to?
They will tell us. That's what he said.
Question will specify
He said
that,
the
my
question
friend.
will specify it. Because
The
how do
question
you know
will
it is not
specify it.
specified?
Please,
Okay, sir.
let's go
Okay,
back
sir.
to this question so that we finish this question. We are
All
still
right, sir.
looking at. We are still going to look at
Yes,
another.
sir. Please,
All
let's
right,
move
thank you,
on.
sir. Let's move to the next. Let's move to
Let's
the
move
question.
on.
Let's move on.
In 2017, second year, what is the stages of completion?
75%.
75%. What is the total revenue in 2017?
52 billion.
52 billion. 75% of what?
Of
52 billion. Give us
That's
39
39
billion.
billion.
What is the total cost in second year?
31 billion 125 million.
Total cost is 41
41
billion
500.
500.
Abi?
Sorry.
Yes,
Yes,
41
sir.
500.
Yes, sir. 41 500.
75% of 41,500.
That's 31 billion 125 million.
The difference, surplus.
That's 7 billion 875 million.
Recognized in the prior period, prior year. The one we
Revenue
recognized.
is 12 billion 500.
You can see this one. This element, we are taking it where? Yeah. You understand?
Yes, sir.
The difference between the two.
Okay, so that would
26 billion 500 million.
For the revenue, Abi?
Yes, sir, for the revenue.
For the cost.
It will be 20 billion 875 million.
That means the surplus that we are going to recognize for year 2017 is going to be what? This is the
5
surplus we are
billion
going to recognize for year 2017.
625 million.
Do you understand?
Yes, sir.
This is the surplus we are going to recognize for year 2017. Now, the third year, 2018 is the third year, 2018. Do you understand?
Yes, sir.
That's 2018 is the third year.
Stages of completion.
100%.
100%.
Stages of completion is what?
100%.
100% of 52 billion.
That's 52 billion. 52
billion, Abi?
Yeah, 52 billion.
Cost for second year. Total
Cost is
estimated cost for the third year.
42 billion 500 million.
Still 42 billion. Abi?
Yes.
That is the difference between the revenue and costs under today
Is 9 billion 500 million.
What will be our recognized in the prior period?
You add the one of 2016 and 2017. That's 39
We are going to take this. We will not take 26. So
okay, it's 2017. Is it 2017 we are going to use?
Yes. What I'm saying is you may go and make a mistake to go and take current year.
Yes.
No, you will take the one of to date. Do you understand?
Yes, sir.
Is what you are going to put in recognizing the prior year. Because this 39 million and 31 million, it consists of both 2016 and what?
2017.
If you go and take 26,500,000, that one is for only which year?
2017.
2017.
Yeah.
So when you want to take recognizing the prior year for 2018,
We take on the column that has to be.
Confusing, it's confusing.
do you understand?
Yes, sir.
No, sir.
sir.
No, sir. No, sir.
No, we don't
Why no?
understand.
Start though.
Okay. Understood.
Is
Please
this
take it
one?
again, sir.
Is this one you are going to carry forward to 2018?
Okay.
You understand? Not 26 and 2875.
That's not that one. So
do you understand?
Yes, sir. Go ahead, sir.
So 39, 52 minus 39.
13 billion.
So 42,500 minus 31,250.
11 billion 375.
So you get the surplus. That
Or 1
means
billion.
the surplus for the year 2018. For the year 2018, what is the surplus for the year 2018?
1 billion 65 million.
That is how we do that. Do you understand?
Yes, sir.
So that is it on a construction contract.
Hello, sir.
Yes.
Hello, sir.
Please, I have a question on that contract cost. In a situation whereby we have wastage or defective material, or if there was
Or
a
scrap.
are we going to account for it as part of the contract?
What do you ask your question again?
I said for materials, for accounting for our contract cost, when we have the wastage or defective material, or there was a theft incident, are we going to account for those materials that were wasted or defective or were stolen as part of our contract cost?
The question is, does those material, do we want to use that material for construction contract or not?
Yes, we want to use it.
Since we want to use it, we will recognize them.
Okay, I was thinking the contractor is going to get the cost of something was stolen. Are we going to still place it as part of a contract cost for
It's part of his contract cost. It was stolen during the construction.
Okay, sir.
It's part of, yes.
Hello, Mr. Hendricks.
Yes.
Good morning, sir.
Good morning.
I have a question regarding the long-term contract on profit recognition. You led mention of 15% that if the completion this thing is less than 15, we should if it is less than 15, we should not recognize, right?
Yes.
Is it applicable in practice or just in an exam condition?
It's applicable in practice too.
All right, sir.
It's applicable in practice. That means that contract is not matured enough. You understand? You have done 15% out of 100% job. You are now start recognizing profits. Do you know what will happen in the future? Do you understand?
All right, sir. Thank you.
Okay. Any other question?
Hello, sir.
Yes.
How about valuation methods? Any question on it so that we can say?
For this my material, I don't have question on valuation method, but I will still do research on that. For now, we don't have question on this valuation method. So that is it on Ipsas 11. We can now go to Ipsas 5. Before we go to Ipsas 5, let's take a 10-minute break. Ipsas 5 is borrowing cost. So we go for a 10-minute break. When we resume, we start with Ipsas 5.
All right, sir. Thank you, sir.
Yeah.
Where is Jonathan?
Hello, have you in the class?
We're on break.
It's time or
Hello.
sir.
Yeah. So we are back.
Yes,
We are
sir.
back. So let's look at Ipsas 5, borrowing cost. Ipsas 5, borrowing cost. Ipsas 5, borrowing cost. What is objective of Ipsas 5? To prescribe accounting treatment for borrowing costs. To prescribe accounting treatment for borrowing costs. This Ipsas 5, it applies to all public sector entity other than government, business, enterprise. Ipsas 5 apply to all public sector entity other than government, business, enterprise. What is borrowing cost? Borrowing costs. Borrowing costs, they are the interest, amortization of discount or premium on borrowing and amortization of auxiliary costs incurred in connection with borrowing of fund. What that one means is that costs, the interest on loan that we collect on a loan as a company is what? Is borrowing. Or any cost that relate to borrowing of fund is regarded as borrowing cost. What are the elements of borrowing cost? Borrowing costs will include, number one, interest on bank overdrafts. Interest on bank overdrafts. Why? Another one, interest on short-term loan and long-term loan. Interest on bank overdrafts, interest on short-term loan and long-term loan, amortization of discount or premium relating to borrowing, amortization of discount or premium relating to borrowing. Amortization of auxiliary costs in connection with borrowings. Finance charges in respect of finance lease is also component of borrowing costs. Exchange differences arising from foreign currency borrowing is also a borrowing cost. Exchange differences arising from foreign currency borrowing is also a borrowing cost. Now, what is the accounting treatment of borrowing costs? How do we treat borrowing costs? That interest on loan or any other cost that we pay while borrowing a fund, how do we treat them? According to Ipsas 5, there are two accounting treatments of borrowing costs. According to Ipsas 5, there are what? Two accounting treatments of borrowing costs. Expense model, number one treatment. Expense model. Number two treatment, capitalization model. Number one is expense model, while number two is capitalization model. For the expense model, that means that borrowing cost, that interest on loan, that interest on bank overdraft, that amortization of discount is expense in the statement of financial performance. We expense them as a P&L item, as an expense in that period that we borrow the money.
You change anything for my life.
We expense them. But for capitalization model,
Sorry, sir,
that borrowing cost, that interest on loan, we use that loan. Capitalization model arises where we use that loan fund, that money that we borrow, to acquire a qualifying asset or to construct a qualifying asset. What is qualifying asset according to Ipsas 5? Qualifying asset according to Ipsas 5 means those assets that take a longer period, a substantial period of time to be ready for use and completed. In capitalization model, that interest on loan, that borrowing cost that we borrow, that we incur while borrowing a loan, we add it to the cost of the assets. That means we capitalize them. Capitalize it as part of cost of the asset. We do not expense it. It's part of, we capitalize them as part, assuming we borrowed money to construct a building. We borrowed 200 million naira to construct a building. And that 200 million naira will be paying 10% interest every year. And we're supposed to pay back in 5 years. We now construct a building. That building, we completed it 3 years. For that period of construction, the interest due on that loan will be added to the cost of the construction. In that case, assuming we spend the whole 200 million on the construction of that building, if we want to know the total cost of the building, we now add the interest for that period of construction. That interest accrued for that period of construction, we add it to that cost of the building. So cost of construction plus interest capitalized is going to give you carrying value or carrying cost of the building. Cost of construction plus interest capitalized is going to give you carrying value or carrying cost of the building. After we have completed constructing the building, any interest that we pay on that particular loan, we cannot capitalize it again. We only expense it.
Huh? Okay.
Let me use a scenario. Let me give 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 a scenario. Assuming a loan, we borrowed a loan of 200 million naira. 200 million naira is the loan. We use it to construct a building. That loan, the interest per annum is 10%. And we use the loan, the repayment period is 5 years. 5 years. And we borrowed the loan on 1st of January. 1st of January. Twenty 2023. We want to use the loan to construct a building, but the construction of that building starts construction date starts on 1st July 2023. The accounting year end of the company that borrowed the loan, is 31st of December every year. So if we are asked that interest on that loan in 2023, the interest on the loan in 2023 will be 200,000 times 10%, which is 20 million. 20 million is the interest on the loan for a year. This 20 million, part of it will be capitalized. Why? Part of it will be what? Expense. That means from January to June 2023 will be expense. Why? When the construction starts, July to December 2023, that one will be what?
Capitalized.
So The interest expense will be
Àlùbọ́sà ugu yẹn
6
lọ́ bá mi wá.
divided by 12. 6 divided by 12 times this. $10 million. The interest capitalized will still be 6 divided by 12 times 10 million. 10 million will be expense. 10 million will be capitalized. What I'm saying is, when you borrowed money to construct a building, if you have not started construction, the
Please, can you do
interest
that
accrued
calculation
on that
again for
loan.
the first one?
So how did you get the 10 million, please?
10 million,
For
please.
the first one.
January to June. How many months?
6 months.
The interest for the 12 months is how much?
20 million.
So interest from January to June will be what? 6
Okay.
months. July to December. 6 months. Do you understand?
Yes, sir.
So that is 6 divided by 12 times, right?
Times
Yes.
2 million.
Yes. Times
20
20
million,
million.
rather.
What we are saying in essence is, why we do not capitalize the whole interest? We borrow in 2023, but construction, that money to construct a project, a building. But we started the construction when?
July to
July.
December 2023.
That is when we are going to capitalize.
Okay, and it's
When
going
we have
to
not started
SOPL.
construction, we cannot capitalize, even if we have borrowed money for the purpose of construction. Do you understand?
Yes, sir.
So that is the thing. Another scenario, assuming we finish the construction, we just finish it. The construction started on 1st of July, and now we complete it on October 31st. 31st of October. 2022.
Grandma's finish her own.
Please try to meet your audience.
Please unmute, please. You are distracting others.
What kind of class is this?
What kind of class is this?
Please try to meet your audience.
Go ahead, sir.
So what we are saying in essence is, please try to meet your audience. What we are saying in essence is that the construction started for 1st of July and it ended 31st of October. Out of 12 months interest, how many months are we going to capitalize?
4 months.
Only 4 months. That means the remaining 8 months, what are we going to do to it?
Expense.
Expense.
Expense. Do you understand? This is another scenario.
But wait, sir, why is it 4 months?
Okay. The construction started in July and completed in October. July, August, September, October. Only 4 months
That's
to be
4 months.
capitalized.
Yes.
Yeah.
Excuse me,
Yeah,
sir. So why are we
asking
capitalizing
how
only
did we
the
know that it's
interest?
4 months we'll
What
capitalize?
about the loan that we borrowed? Why are we
Please ask
capitalizing
your question
only
one by
the
one.
interest?
Oh my God.
What do you say?
Why are we capitalizing only the interest on the loan? What about the 200 million that we borrowed?
We're not there.
Oh my God.
The interest, can I answer the question, please? The interest rate is allocated on
Okay,
the
sir.
cost.
Sorry. Please, you are explaining. Can you explain like from the very start? Because when the class
Hold
went
on,
off
as
and I'll
someone
be
is
trying to
explaining
join.
to you now.
Yes, not like from here, because I'm lost. That's why I'm talking. That's why I'm saying this.
Okay, let me quickly brief it. Let me brief it.
Thank you so much.
The loan is 200 million here. So, and the interest on loan is 10%. So 10% of 200 million will give you 20 million.
Okay.
Hello. So the 10% of 200 million will give you 20 million. So the repayment date year is 5 years. So now this we now have construction date. So the construction date, the expense and the capitalization, the expense and capitalization will depend on the construction, will determine the construction date. Construction date from the construction date is July.
Now,
the construction date is July, is July to December. I'm explaining this then.
Okay, continue.
The construction date started from July to December, which is 6 months. So that's 6/12 times the 20 million that we get. We give you 10 million.
Okay. I'm not
So
giving another scenario. I said if the construction date start in July and end in construction date starts in July, end in when? At 1st of October. That means capitalization period will be how many months?
4 months.
4 months.
You know,
Please,
this
how did we know that it's 4 months, sir?
An illustration.
What I'm even saying is that is it not supposed to be 200 the loan?
The interest is what we are after.
Okay, I understand now.
The interest. How is 4 months? Construction of that asset starts in July and it ends in when? October.
Oh.
From
sorry,
July
sir,
to October.
continue.
That would be 4 months.
Yes, sir. Sorry.
That means, you know, this 20 million interest is for 12 months.
Yeah.
Out of 12 months, how many months are we going to capitalize? How many months are we going to expense? In this scenario, 4 months will be
Capitalize 4
capitalized.
months.
8 months will be
Expense 8
expense. Abi?
months.
Yes, sir.
So that is a clear example. Let's go back to our. So treatment of borrowing costs. Borrowing costs can be treated in 2 ways: expense model and capitalization model. We use capitalization model when we use the borrowing cost, when we use the fund that we borrow to construct what? A qualifying asset. What is qualifying asset? A qualifying asset, they are fixed assets, tangible assets that take a longer period to be completed and ready for use. Now, we want to talk more on this capitalization model. How do we treat capitalization model? When we want to treat capitalization model, we should have 3 things on our mind. Commencement date. First, commencement date. Cessation date. Third, suspension date. I want to explain capitalization model. How do we treat capitalization model? How do we get the capitalization model? If we want to get the capitalization model, we are going to know 3 things. We are going to know commencement date. Commencement date means when the construction of the qualifying asset starts. In my scenario, my commencement date, let me go back to that Excel. In this my scenario,
Started from July.
what is my commencement date?
July.
1st of July 2023.
July. Yes.
Yeah.
Cessation date simply means the date
End of completion.
qualifying asset is completed and ready for
use.
For what?
Use.
Ready for use. Are ready for use.
Okay.
In this scenario, our cessation date will be 31st of what?
October
2022. Suspension date. Suspension date means during the period of the construction, for some number of months, they went on suspension. They did not do any construction work at all because of some reason. Maybe because of shortage of raw material, or because of government policy, or because of security reason. Example, let me give another example. We want to construct a building. We now say that building, we are going to construct it for 12 months, starting from January to December. That means the commencement date is January. Cessation date or completion date is December. Abi? During the period of the construction, an incident may happen. An incident happened. For 2 months, construction is not going on. For that 2 months, that is the suspension date. That suspension period, you are not going to capitalize the interest during suspension period. The interest that arise during suspension period will be expense. It's not going to be capitalized. Do you understand?
Yes, sir.
Yes, sir.
Any interest that arise during suspension period is going to be expense. It's not going to be capitalized. Another thing we need to know under capitalization model is treatment of idle fund or surplus fund. We borrowed 300 million. We want to use 300 million to construct a building. Then when we start the construction, we first use 50 million. That means the balance will be what?
Idle.
The balance will be idle. The balance will be how much out of 300 million?
250.
250 million. That 250 million that is idle, you can invest it in a stable that will generate income. Abi?
I don't know, my effort did not connect. Please, there are disruptions. Please, I didn't hear that.
Please, can you say the question again?
I said, I want to give example. A company want to construct a building. They borrow 300 million. And they want to start constructing the building from January. And they expect by December, the building will complete. Out of 300 million, first money that they used is 50 million. You understand? The balance that remains out of 300 million, when you remove the 50 million, that balance that they are yet to utilize is called surplus fund. Do you understand?
Yes, sir.
That surplus fund, that company can say, we cannot just keep this money idle. Let's go and put it in a what? In a what? In a fixed deposit, Abi? So that is going to be generating what? Interest income. Until when they need the money, that is when they will go and liquidate the fixed deposit. Do you understand? That interest income that surplus fund generates during construction period, that interest income will be used to reduce the interest that will be capitalized.
Wait, because others cannot apply that.
Do we understand?
Apply for finance.
No,
let's go back to our Excel. Let's go to our Excel. Let me give a scenario.
It has to be very.
Let's give a scenario. Let me give a scenario. A company borrowed a loan of 300 million. 300 million.
8th of November. I know.
They borrowed the loan on
Yes,
1st
ma'am.
of January
Bẹ́ẹ̀ni, ma'am.
2023. Construction.
Okay, ṣọ́ máa ṣí lónìí. Tó bá máa ṣí lónìí, máa lọ yẹ bí o.
Please now, guys, help.
What's all this now?
Ayobamidele, Abi, who is
If you are
that?
not ready for the lecture, you can opt out.
Please, guys, help us now. The distraction is
Please, when you are not, you can just log out.
Mute everybody, please. Mute everyone.
How can I mute everybody?
Yes, mute everybody.
Are you the host? Are you the? I feel like you are the host to be able to mute everybody.
Now, the construction start on 1st of April. 1st of April 2023. And for that 1st of April, they buy material. Cost of material. Cost of materials is what? 50 million. $50 million. The project, the building completed on 31st October 2021, 2023. Now, how they spend 300 million? They buy material on 1st of April 2023.
Hello.
Can you hear me?
Please, can you?
Oh, God.
It's actually very rude. Please, can we
Who are
just
these people now? Who are these people now? Huh?
Tí máa ṣe tán ṣàmà, mo ń ṣe kíláàsì kan lọ́wọ́ báyìí sí. Wọ́n nù.
The project completed, how they spend the money. Another one, they buy another material on 1st of July 2023. Another material that they buy on 1st of July 2023, that is 250 million. And they complete. Now, on this loan that they borrowed, the interest rate is 15%. The accounting year end of the company, accounting year end, is December 31st every year. Now, interest rates on surplus fund, interest rate on surplus fund is 5%. Now, I want to know how much interest am I going to capitalize? How much interest am I going to expense? First, let me know the total interest on the loan for a whole year. The total interest on the loan for 1 year is 300 million times what? 15%. Abi, do you understand?
Yes, sir.
That is the total interest on that loan for 1 year. I want to know the interest I'm going to capitalize. Interest capitalized now. Interest capitalized. How many months interest am I going to capitalize? How many months interest am I going to capitalize? Construction starting when?
It's 7 months.
April. Abi? 2023. Abi? To when?
October now.
October
Yeah.
2023.
That's 7 months.
That is 7 months.
7 over 12.
That would be this
7 over
interest
12
capitalized.
times 45 million.
This total interest times 7 divided by 12.
12.
What we are now saying now is during the period of the construction, there is a interest income. There is an interest income on surplus fund.
Yes, from the investment.
Interest income on surplus fund. On surplus or idle fund. What is the interest income on that surplus fund? You know, immediately they started construction, they spend how much? 50 million, Abi?
50 million, yes.
Out of 300 million, they spend 50 million. It is until July 1st, they now spend another, the balance of that 250, Abi, that will make it 300,
Yes,
Abi.
Yes, sir.
That means April, May, June. That means 250 is what? Is surplus.
Surplus.
What I'm saying is from 1st of April 2023 to 30th of June.
Yeah, 30th.
2023. $250 million. A sum of 250 million is surplus. We do not use it. Abi?
Yes, sir.
And when we do not use it, what is the interest that is going to give? Times 5%.
5%.
Times how many months?
3.
3
months.
divided by what?
12.
12.
That means our interest capitalized, our interest income will be 250 times 5% times 3 divided by 12. Now, we will less it from this interest that we want to capitalize. Our net interest capitalized is going to be what? The difference between these.
No difference. Okay.
Do you understand?
Yeah.
Do you understand? Now,
Yes,
interest expense. How many months interest am I going to expect? Interest expense. Interest expense.
That's 5/12.
How many months interest am I going to expense?
5.
Interest expense
3.
is going to be
3.
3 months.
First and foremost, they borrow the loan when?
January to March.
January to March will be expense. November and December too will be expense. That is what?
5 months.
5 months. Out of 12 months, 7 months is already capitalized, Abi?
Yes, sir.
5 months will be expense. And that 5 months that will be expense, I'm listing them. First, January
to March
2023, Abi? To March, before the construction, Abi?
Yes.
Then
That is
after
before
the
the construction, Abi?
Yes.
After the construction, which one is that? November
2023 to December 2023.
So
December.
that is what? So the two of them will give us what? 5 months, Abi?
5 months.
So my interest expense will be, how much is the total interest for the year?
Interest is
45 million.
Times 5 divided by 12.
Yes.
This is the total interest I'm going to expense. Do you understand?
Yes.
That is the interest for 5 months I'm going to expense. Now, for the expense too, there is an interest income on surplus fund. There is an what?
Interest income.
Interest
Sir,
income on surplus fund.
Mr. Idris.
Yes.
This class is recorded, sir, right?
Yes.
Okay, sir. Yes, sir.
Also, sir, please can you share a screenshot of this Excel page after the class?
I will share it.
Exactly.
Thank you. It's past 11 too.
This one and the material. Meet some adjustment to the material.
I will share. Now, How many months interest surplus fund amount recognized? Who can tell?
5 months.
I say 5 months. 5 months,
5
because
months.
the idle fund was fixed, was invested in a fixed account, and the interest for the 5 months. So that's it.
They borrowed the money when? January. They started construction when?
April.
April. January, February, March. How much is surplus that is not used?
That's 3 months.
3 months. How much is the surplus fund that was not used for January, February, and March?
250.
Not 250.
Eh?
It's 300.
300. That actual loan that was borrowed, they did not use it in January. They did not use it in February. They did not use it in March. They started using it in when?
Yes.
April, and they used 50 million for him. That is when the construction starts. Do you understand?
Yes, sir.
So interest on this surplus fund is going to be from January to what? To March, which is going to be how much? 300 million.
300 million.
Times what?
5%.
5%.
Times 1 over, times 3 over 12.
Times 3 over what?
12.
12.
Oh, yeah. Got it now.
So the net interest expense is going to be this
8 plus 3,750.
That is 50 million. Do you understand? That is that. So let's try to look at a question from this our material. The only question that we have.
Please, Mr. Idris, I have a question, please.
What is your question?
Please, can you go back to the Excel sheet?
Okay.
Sorry for taking you back. Sorry.
So this class ends at 11 also. We have another class.
Please.
You have another class?
Yes.
Mr. Idris.
Okay.
Hello.
Hello,
Please,
I can hear you.
Okay, how did you arrive at that 23,125,000 and that 3,125,000, please?
This 26,250,000 minus 3,125,000. It will give you 22 million.
How did you get the 3,125,000, please?
3,125,000.
Yeah.
Look at it. Out of 300 million that they borrowed.
Okay.
They first used how much from out of the 300 million?
They used 50 million.
50 million.
Yes.
How much will be remaining in the account?
250 million.
250 million. That 250 million is a surplus fund.
Okay.
That 250 million is going to surplus for how many months?
It will be 6 months. Yeah, 6 months.
No, not for 6 months. It's going to be surplus from April, May, and June. We later use that 250 million when?
July.
In July. Yes.
We later use it to buy material. Once we have used it to buy material, it's not surplus again. But it's
Okay.
surplus for 3 months. That 3 months that is surplus, the interest income for that 3 months
Oh,
is 3,125,000.
okay. Thank you so much.
Yes.
We have
So,
another now.
since we have another class, I will not be able to solve this question. Oh God.
We'll come back to the question.
Sir?
So let's leave it on.
We should not.
Let's fix another time. Let's fix another time for the.
Yeah, maybe
Okay.
our next
So
class
what I
now.
will do is another time. I don't know which day can we arrange this joint class so that we finish this question. What can we
Next
do?
class.
On Sunday.
On Sunday. This
have-
question will not take us 30 minutes. Sunday.
On Sunday, we are having
30 minutes.
But on
Sir, we are having physical
Sunday,
class
we're having
on Sunday.
our student.
That one does not
And it's
mean
not a joint class, it's a physical class.
Physical class. We are
Madam,
having physical class on Sunday.
if you are ready to solve it, if you are ready to attend this class for us to finish this question, 8:30 to 9.
It's not possible, oh.
It's not possible.
It's not possible.
People are leaving
It's
class
not
by 7
possible.
p.m. It's not
By
possible on
7
Sunday, and
before
people
we
will be
get home.
tired.
Before we
Many
get
of
home
us
it's
are
on
living at
Sunday.
distant places. It's not possible.
Yes, some people are living at
Madam,
different places, and we got to
please.
consider traffic.
Madam, let's try to strive. Our exam is next month.
Mr. Aegis, we can put it day, not on a Sunday.
On Sunday,
Mr.
we need
we
to
can
I'm going
leave
to
it
Put it
for
on a
Monday.
Thursday. We can't put it on
I'm
a
going
Sunday
for
when people are
lecture.
finish class from 8 to 7 p.m. Sir, that's
No,
not
it's not
being
easy
considerate.
now.
I'm sorry. If it's on a Thursday, we can do it on a Thursday evening. But on a Sunday, we have
Thursday
physical
evening,
You know
class.
yes.
what will happen? What
On
will
a
happen?
And let him
When do we
talk now.
finish
He's
lecture
already
today?
trying
When
to
we are
answer
going to
the
finish?
issue.
Hold on.
On
When
Thursday,
do
we have
when
our
do we
own.
supposed to finish lecture
Company
today?
will solve
We
everything.
have
He's
class from
already
8
trying to
a.m. to
address the
7
issue.
p.m.
Can you
Please,
just let
can
him
we
talk?
wait? Please,
Hello.
can we
do this.
calm down?
Finish it up on Saturday when you come to the class, sir.
I want it for a joint class. It's a
He
joint
wants
class.
a
I will not
joint
solve it
class.
in class.
Sir, the class can only work on a day that is not Saturday or Sunday. On Saturday and Sunday, we
Yes,
have physical class. 8 p.m. to
exactly.
7:30 on Saturday. 8 a.m. to 7:30
You
p.m.
know
on
what?
Saturday.
I will
It can't work.
communicate to you by WhatsApp when I'm going to
Sir,
have the class.
communicate, but please be
And
considerate. It's not only
that
online
my
students that are here.
communication is going to be final with no objection.
Okay, sir.
Final
Okay,